Moving on to the property market then. I don't want to sound like Jeremiah, the prophet of doom, but there are some dark clouds that have begun to gather. You've got now interest rates rising, and the mood music coming out of the Bank of England is that there's going to be further rises this year. Inflation, they have tried to headline as, I suppose, managing our expectations by saying it could reach 7%. And then you've got large employers like Tesco, who last week were laying off thousands of people in an attempt to try and make them a leaner, fitter business. So there's all these stories which traditionally would take heat out of the property market. It would be cooling. How do you see it?
Okay, so let's look at all of those points. Let's look at interest rates. So we're filming this in February 22, and the interest rates are now at the heady rates of 0.5%. The market has already priced in interest rate growth to about 2.5% anyway. Now, both of us have got enough grey hair that if you roll the clock back 15 years, the interest rates were at 6, 7, 8%. And if you go back to the early 92, they're at 15%. What is quite interesting is this, is today, even though the house prices have more than doubled, in fact, sometimes nearly tripled, especially around the Wrexham area, it is still cheaper today to buy a first-time buyer house in terms of percentage of take-home pay going on mortgages today compared to 2007. So the interest rates really don't worry me because 79% of people are on fixed rates anyway. Interestingly, I've read an article this morning in the Times, and they actually said that the price of 95% mortgages, even though interest rates are growing, is actually falling because banks don't see them as much of a risk.
Chris, thank you very, very much.
Thank you, Vaughan.